Hello everyone, Larry Lavrenchich here for IchimokuCharts.com and ForexTrading.tv. Today we're going to have a look at an interesting chart. It's the Euro Aussie FX for the close of trading for Thursday, October 31st, 2013. Now it's an interesting chart because if we take a step back and look at this in a longer perspective, and this is a daily chart with the Ichimoku indicators on here, and this really highlights well how Ichimoku in big picture terms can highlight very important changes in sentiment in markets. And here we saw around March, April, the market trading down below the cloud, and then the breakout up above the cloud, a bullish breakout, which was quite a successful breakout, a buy signal with Ichimoku charts, a retracement back to the cloud, and then a very substantial trend that ended up trading well above the 1.5 level, 1.150 level. The market then in August retraced back towards trading into the cloud to highlight a neutral market in big picture terms, and then we eventually saw a breakout down below the cloud in early October, giving us a bearish market in that longer term time frame. So quite a change of sentiment in this market over the past 6 months. Whereas we were very strongly trending up, now we are trading with a longer term bias to the downside. Now just looking at a few trend lines on here, and this major trend line, a very long trend line that had been in force for quite some time, alerted us to a potential change of trend in this market. And this really highlights quite well how a break of a trend line doesn't mean a change of trend, and we need to be careful how we use trend lines. Trend lines actually tell us something about a change of momentum of the trend in the market, not necessarily a change of trend. If we look here, we broke the trend, but based on peaks and troughs, this trend was still up. We didn't have a change of trend until the market tested down to the bottom of the Ichimoku cloud, and here we had a lower peak and a lower trough, so therefore a change of trend there. But the break of the trend line alerted us to the potential for that to occur. In bigger picture terms, once we had the peak, trough, lower peak and lower trough established in this market, we were able to draw this trend line, which has been broken in the recent past, about a week or so ago. And that doesn't mean that we've had a change of trend in that big picture time frame based on those peaks and troughs. It means that we've had a slowing of momentum of the trend that represented. So we still do have a possibility of a continuation of the trend to the downside, but it does raise some doubt about whether this trend will continue. Now let's just take a closer look here at price action, and as I mentioned before, as we saw the breakout down below the bottom of the cloud, we saw some decent follow through with the market finding support down around the 140-120 area, and then rallying up to the flat Kijun-sen. The Kijun-sen had potential to hold as resistance for this market. It did for only 1 or 2 days, and we saw the market continue to rally to find resistance at the top of the cloud. And this is a classic way that we see Ichimoku develop. We see the breakouts, we see some follow through, and then we generally see a retracement back towards the cloud, and then a continued sell off. So this is suggesting that there is a good possibility of this market continuing to the downside. If we look at the interaction with the cloud here, we saw a bullish test into the cloud, and then indecisiveness enter, and confirmation of a change of trend with this very large black body candle for today's trading. The black body denotes the sellers making a substantial amount of net bearish progress on the day between the open and the close. They've closed with control, so they've come back into this market very, very strongly. And looking at the recent first time frame uptrend that traded through the important Ichimoku indicators, they were all white body candles, and it's little wonder that we've seen some selling come into this market. Now the market is interacting with the Kijun-sen and the Tenkan-sen, and that will offer it, or has potential to offer itself as very strong support for this market. Combined with the 143 area just below, we could see some buying coming in around these levels. So quite a bit of indecision in the market with regard to how this market reacts to these levels. If we do see the buyers come back in, we may find some decent resistance once again at the top of the cloud, which is trading roughly up around the 145 area. So some very strong resistance overhead, but a strong early bearish activity down below the Ichimoku indicators and the 143 area could quickly see the market testing to 142, and then even perhaps down to 141. and that would be in line with this very strong change of sentiment that we had seen in this market in big picture terms, with the market now trading down below the cloud. So really crucial to this market at the moment, and to a bigger picture time frame, is how we react to this Kijun Sen and Tenkan Sen. And if the buyers do come in strongly and close the market back up above the cloud, then it may mean that this test down below the cloud was really just a folly, and we could see the buyers continue back up on their way with that strong trend that we've seen for the previous 6 months. But it certainly doesn't look as though that will happen. This is pretty much classic activity with the breakout below the cloud, the retest, and then the sell-off once again. But we never try to preempt the market. We work with the market, and we work with these levels here, and we have potentially strong support around the area that the market's trading at right now. If we do see a bearish breakout down below there, it may be quite significant.